So this is the wrap up for the live market open for Tuesday, December 8th. We had the main feature in markets was the crash in oil prices. We've talked about that quite a lot in the program. We fell below the August lows and back to lows last seen in 2009. That's a sort of cascading belated reaction to OPEC on Friday. It had an immediate impact on the Canadian dollar. Dollar CAD is rising to new highs, 135.26 at the moment. The critical level it broke above is 134.60, and probably the sky is the limit. So that's the main feature. It has also some implications on the Aussie dollar, which fell one support level lower from last 72.80 and last 7, and now it's finding support at 72.25. But in Australia, we also had an impact from Chinese trade balance that was disappointing, especially exports, but not only that. So these are recent developments. In addition, we had Japanese final GDP coming out better than expected, coming out positive. So Japan contracted only for 1 quarter, and that's, of course, good news for Japan. And that means less stimulus, more stability for the Japanese yen. Dollar yen very well in range, 123.06, resistance 123.60, support 122.20. This wide range of 140 pips has been going on for quite some time. It's not as frustrating as previous ranges in dollar yen. Okay, what else do we have? Well, let's talk about a few currency pairs. Euro dollar made this dip under 108 yesterday, under 108.30, which is support. Now it's rising once again. It still doesn't know if to believe Draghi or not. It's 108.90 is resistance, 109.50 more important, and 110 very important. 108.30, 107.60, and 107.10. On the downside, Draghi tried to do some damage control so far with little success. Okay, pound dollar currently 150.30, sliding down. 150 support followed by 149 resistance, high resistance at 151.60. That leads us to today's events. At 9:30 GMT, we have industrial production, industrial output out of the UK, manufacturing production. Expectations are relatively low for the manufacturing sector, and that's not surprising. We've also seen the PMIs, the Purchasing Managers Index for the manufacturing sector come out weak. This has an impact even though it's for the month of October. We have some more figures for Canada now that the Canadian dollar is sensitive in general and moving quite a lot. Housing starts, and 15 minutes later at 1:30 GMT we have building permits. And a figure for the Fed comes at 3 GMT, the JOLTS. It's a Fed favorite, even though it's for October and we had the NFP already for November. It's still important. The Fed looks at it as a wider impact for wider move for wider figure for the job market. Look there at the number of quits. This shows confidence. More from Canada at 10 to 6 GMT, Stefan Pelot stocks, and then we have focus to Australia, Australian home loans, and Chinese CPI. Okay, so today is a bit busier than yesterday, and tomorrow and Thursday will be the busiest of the week. These are the events for today. Let's talk about a few more currency pairs in the wrap-up before we head off. Kiwi dollar is relatively stable at 66.45, support at 66, resistance 67.90, standing out among commodity currencies. Dollar Swiss battling with parity ahead of the rate decision in Switzerland on Thursday. There is a chance that we will see another rate cut deeper into negative territory over in Switzerland. Okay, so that's it for the wrap. I see we have more questions. Which weekly outlooks? On Friday we did this preview for next week's events, which is already now this week, and it was published as a separate clip. So I'll try to look for the link for that. And anyway, any feedback is welcome. What pairs to watch today? Well, the Canadian dollar with oil prices, and also the pound. Well, first of all, the pound, and then which has the manufacturing production, industrial production, and then of course the Canadian dollar, ongoing stuff with oil prices, and a few figures in the speech from Pelosi. Okay. Another question. Yesterday's low on euro was 38.2 Fibonacci retracement from Thursday's big move. Okay, that's an interesting point. I didn't examine that. So I guess now the technicals are more in play than the fundamentals. Thank you very much for that comment. In general, if you guys, you want to put some charts, links to your charts, and we can talk about them, of course, you're always welcome. All right.